So Pedro, I think I had promoted you. Let's see here.
I don't
Let
see
me
him over
try
there
to
just yet, but
promote the panelist. Okay. Okay. There you are, buddy.
all right.
Yeah,
Have a great
th
interview, guys, and welcome,
thank you.
Pedro.
Thank you. Here I am. How are you
Happy
guys?
New Year.
You too, Dale. How's it
Yeah,
going?
great. Good. Great to have you here. We had a couple of schizophrenic inflation reports. But, I want to know, we're, a week or so into the new year. What's top of mind for you, Pedro, as we enter this year of 2024?
Sure thing. So, what's one of the reasons I love this beat is that whenever I think things are about to get boring, something happens and and it gets exciting all over again. So, I started off the year thinking, what are we going to write about? They're kind of on hold for now. But as you know, the market has almost immediately flipped from, the Fed's implicit declaration that it's done hiking to the timing of rate cuts.
Yeah.
And the Fed introduced another little wrinkle for us in the minutes of the December meeting, which was that they're going to start debating the its pace and timing of a taper to quantitative tightening. So those two things are top of mind for me. One of the things I'm paying close attention to is this weird contradiction where the less hawkish the Fed becomes and the more it's willing to embrace the soft landing story, the more it kind of risks reigniting inflation because, as you know, financial conditions loosened
Yeah.
considerably after the last meeting. And despite some effort to do some job owning to push back, markets are still pretty hung up on a likely March cut, and markets, might be even kind of elbowing the Fed into doing that. So I'm watching for the prospect of some reacceleration in inflation early this year, and I wonder. I think there's going to be a big split within the FOMC about whether or not to begin in March. I think some people are eager to start in March. There is a dovish core that has kind of gained the upper hand in recent months and weeks as the Hawks throw in the towel. And it's going to be the year is going to be about kind of reconciling the market's fairly dovish expectations and the Fed's desire to at least say they're staying higher for longer.
Okay. So do you think there's a good chance that the 10-year troughed at 380 and that we're going to start to see yields begin to creep higher again?
I do. And
Okay.
another reason I think that is the fiscal picture hasn't really changed, and that has been one of the key reasons for that, for the increase that has since reversed. So I don't see us going, very far below the recent lows. That's for sure.
Okay. There are some guys that think that we're going to sometime this year trade above the 5% level. Can you think of uh, what conditions? I think first we have to transition from, do we still have six cuts priced into the market, even though yesterday's number was a little hot?
Pretty much. I mean, the market
Yeah.
gave up some of its pricing, but it's still more than a 50% chance. I think it went down from like 80 something to 60 something, but it's still a
Okay.
preponderance.
And this is for March,
That's right,
for a
for
cut in
March.
March. Okay.
Exactly.
All right. Anything that we should really be keeping an eye on? I know your bailiwick is financial stuff, but it's hard to ignore geo stuff that turns into financial stuff like shipping
Yeah, I
and
mean it's a
supply
pretty
chains.
yeah, it's a pretty shocking turn of events overnight. I mean, not shocking from this, from the standpoint of predictability. The US had been warning about these possible attacks on the Houthis in Yemen, but I think it's kind of ironic. I keep hearing on the radio and in various news outlets uh, that these attacks by the U.S. and the U.K. could lead to an escalation when in fact, obviously, they already represent an escalation, right? And we
Yeah,
see that reflected in the energy complex. I think
yes.
that is one big potential source of, renewed inflation. And there's
Okay.
also a kind of a deeper issue. I went down to Richmond yesterday to cover a speech with Richmond Fed President Tom Barkin, and he spoke to reporters afterwards, and we had a pretty extensive debate with him about, the idea of R-star rising and the neutral rate rising, and the idea that we've entered a new inflation regime. And he pointed to several factors that, I think he said basically that you don't have to squint too hard to imagine that we've got some risk coming up. He cited everything from deglobalization, from large retailers and others changing their mindset around the trade-off between price and supply security, the issue of demographics. So all of those forces, like labor force growth and access to offshore labor, that had been fueling the low inflation period of the last 20 years,
going away.
Arguably have gone away. So
Yeah.
even after we get over this initial hump of this surge in inflation, we might be kind of stabilizing or plateauing at a higher level. And that's going to be a concern for the Fed. You mentioned financial issues. And one of the things that's kind of I'm paying attention to also is the Fed's bank term funding program expires in March. Of course, that was a very successful program from the standpoint of ameliorating the regional banking issues, but you could argue it was also a Band-Aid that just kind of kept the financial stability turmoil under wraps.
Yeah.
And the Fed is going to have on the one hand, it would probably like to extend the program because it's worked out well, and and it doesn't want to rock the boat. At the same time, it is a program that's undertaken under kind of emergency authorization, and it requires an emergency. So to renew it would be to admit that the banking sector is still kind of in an emergency, in an emergency state, which is probably not the case. And it might be kind of self-fulfilling. So we're watching again closely for what kind of decision the Fed's going to make. They have to decide that within the next 2 months, because
so here's the epicenter. And, the regionals even look great.
Yeah.
So, I mean, this doesn't look like an emergency.
No, it certainly doesn't. And in fact, the Wall Street Journal had a nice piece about how the banks are actually kind of gaming the system a little bit by, because the way the program works is based on sort of expected rates. They're kind of arbitraging the rate at which they had locked in the program and the rates at which they can now borrow. So,
although if I break out my telescope, Pedro, and I look at a weekly chart and then look left, this is a pretty interesting area that KRE has stalled out at, and maybe there could be a problem. It's not bullish unless it pulls back and then blows through these highs, technically. Yeah. Yeah. So pretty interesting time for them to be considering ending it. I don't know if I'd want to be long regionals into at least, part of that ending phase.
And it's kind of related to QT, right? Because it's all about liquidity in the system. And so the fact that they're already discussing ending QT when they had previously said, we don't have to think about it anytime soon, suggests that they don't want to get anywhere near close to the situation that occurred in 2019, where there were wobbles about QT that forced the Fed to not only halt it, but to actually start buying bonds again.
Okay. You have any views on gold, or write any stuff about gold? It's becoming, besides Bitcoin, we're threatening all-time highs here. I thought we might get a pullback into this range, but today's action, it's a process, getting different information today. You have a view on alternatives to fiat, like gold and Bitcoin, Pedro?
I don't have a firm view on it, but I think they're, the recent strength in those assets kind of reflects the level. I think that speaks to the geopolitical side that you were mentioning. It speaks to the level of geopolitical uncertainty, because the whole basis for the U.S. as a reserve currency, and for the dollar to be king, if you will, is kind of American military dominance and might. I think it's like, when bleep hits the fan, what do you want? What denomination do you want your assets in? And so I think that the undermining of the geopolitical order that seems to be taking place before our eyes on so many fronts, whether it's Ukraine, whether it's China, Taiwan, whether it's Israel and Palestine, that is kind of the basis for that strength. And I don't
Okay.
see the uncertainty going away anytime soon. And the other factor that seems to be very challenging for the US is, to be honest, it's the first time in my 20-year career following the bond market and the Fed that there seem to have been kind of genuine market moves in the bond market related to worries about the US ability to sustain its debt. And it's not just the ability to repay, because obviously we can repay. We are, a fiat currency system, but I guess it's the political will as well as the deterioration of our political risk outlook and the fact that we are becoming emerging market-like in terms of our institutional decay. I think that
Okay.
is the kind of thing that strengthen the types of assets that and alternatives that you were discussing.
Okay. Yeah. So we'll see that be tested again next Friday. I believe there could be a partial shutdown.
I think that's right, but my sense and this is not my bailiwick in particular, but I get the sense that they're going to come around to
A deal
a
like they
deal.
have.
But again,
Yeah.
it's really the erosion of trust that comes with these repeated incidents, right? And the lack of any plan from either party to reduce the deficit in any way, which, by the way, is also a major inflationary force that the Fed kind of ignores at its own peril. One of the fascinating things to me in terms of watching the Fed has been the extent to which this Fed has almost gone too far in the direction of never discussing fiscal policy. It's one thing to avoid fiscal issues because you don't want to step on Congress's toes, but it's another thing to not even factor it into, to publicly factor it to how you're thinking about your macroeconomic outlook. And that's partly what burned officials in terms of their missing the inflation surge and thinking it would be transitory. And I fear that this could happen again, that the ongoing, fiscal impetus that we have in the economy could sustain inflation in a way that policymakers catches them off guard.
Yeah, it's interesting. While you were saying that, I just flashed back to the Great Recession and Bernanke saying, well, the Fed did their part, but I'm concerned whether or not we have the political will to follow through, which meant fiscal stuff, right?
100%. He was very willing to call for that. And in fact, I think one
Yeah.
of the reasons that Powell is actually now circumspect about discussing fiscal issues is he got burned a little bit by supporting the fiscal stimulus, by
Oh,
earnestly supporting the fiscal stimulus that ended up leading to the inflation. So
right.
I think that led to some internal communications decisions that maybe it's not great for us to be making these kinds of statements. But again, that might have been taken too far in the other direction, in the sense that we hardly ever hear the Fed acknowledge that fiscal policy is actually working at cross purposes with monetary policy.
So is Paul Arthur Burns now?
I don't think he's Arthur Burns, but I'm glad you asked that. I definitely don't think he's Arthur Burns. I think he's very, I think he's definitely resolved to ensure his legacy is not that of Arthur Burns. But he's not Paul Volcker either, right? And
No, he isn't.
we had the sense that he might be after his 2022 Jackson Hole speech. He was very stern. He cited Volcker several times, and I honestly got the sense that he was a kind of a changed man, and he'd seen the light, and it was really just going to be a one-sided mandate kind of chair. But he's become a lot more balanced and a lot more willing to accept, to his credit, if the facts change, right? But I also fear that this willingness to publicly embrace, a benign scenario, again, pushes us away from that scenario, because it leads to inflation expectations potentially again becoming unanchored, and it leads to people, to consumers and businesses who've already become accustomed to inflation being an issue for the last 3 years, potentially expecting more of that down the pipeline.
Okay. You know, this too might be outside, but I just think that all of these things are kind of coming together of, like incompetence, like a defense secretary going in and under anesthesia and not reporting that he was going to be, you know, out of pocket for 2, 3 days. Kind of erodes the confidence in America, doesn't it?
I think it does. I think it is this kind of I mean, it's honestly kind of inexplicable. I still don't fully understand that story. And
Yeah.
again, the lack of a reasonable explanation leads you to believe the worst, I guess. And yeah, I think it's a general loss of confidence in our institutions, in our ability to work together. You know, it's a cliche that America is a divided country, but I think when we used to say it in the 90s and the early 2000s, we had no idea just how divided we actually were or would become.
No, no. And what kind of message is it to both our allies that count on us and our adversaries that are looking for weak spots?
Yeah, I mean, the message is that we don't need to do any work. They're
Yeah,
destroying themselves from
yeah.
within,
Just
right?
yeah, sit on. Who said that? Well, who was the communist leader that said?
I
Khrushchev said
forget.
that,
I think it was
wasn't it?
Khrushchev, right? I think that's right.
Yeah, yeah.
Exactly.
So,
And
our,
I think Putin is sort of sitting pretty, already watching Ukraine aid,
yeah,
wither and just
right.
saying, if I just wait this thing out and there's a Republican victory, then I might be able to just, call it a day and, say that I won the war. And so that's just one of the many theaters of conflict that we're now engaged in. So
Yeah, it seems like all levels, politically, financially, geo, it's on multiple levels. So, do you have a view on the dollar with everything we're talking about, Pedro? Will the dollar be the sacrificial lamb to inflate our way in a Burnsian style? Um, lower dollar. It also would support your reflation view, which is also what happened in the 70s. We had, I think, 3 rounds of inflation spikes with pauses in between them. So maybe this was just spike one, and and now we've had the respite of it, and then we get spike two coming up, and a lower dollar would definitely not help the cause of inflation, would it?
no, it wouldn't. And I think that is the big fear for the Fed is a repeat of the 1960s and 70s, which they themselves have warned about, would leave them in the worst possible position. And in the short run, I think that's what could lead to a sort of
Yeah,
reacceleration of the spike in yields in the 10-year, for instance, is if suddenly we get to the middle of the year, inflation has plateaued around 3% or has even spiked from these levels for some reason or another. And then rather than talking about cuts, there's some Fed officials considering an additional hike. That would really that talk about the level of market reset that it would take to go from pricing in 6 cuts
yeah.
and all the expectations that go along with that to having to start to ponder potential additional hikes. I don't think that anybody in the market is anywhere near ready, and that might be the kind of shock event that could really send us into a harder landing scenario. So what that
Yeah,
does to
so
the dollar is more,
yeah,
is more your world, and I'm open to
yeah.
your views, but
What
because
you
there's too
know,
many dynamics for me to factor in, but that
yeah.
is that is their fear and that is my fear. So
Yeah, yeah, and I don't want to be political about it, but the stock market, has been great. So, it's there's people that have targets sharply higher, that
yeah.
we're in a melt up, and S&Ps are going to, 5,200, 6,000, even 7,000. I think the point though is if we accomplish this, melt up means it happens in a hurry, right? And we tack on most of the gains for the year into the first quarter or into the summer, I think it's a direction of where the market is going in the summer that's going to decide the outcome of the election.
That's a very good point. And also where we are in this conflict, right? How involved are we? Are we at the stage of like America rallying around the troops, or are we at the stage of America bemoaning, wayward engagements in the Middle East? It's hard to know.
Yeah, I think that uh, seems like Americans especially after Afghanistan for 20 years, are pretty tired of it.
I think so too. And I mean,
Yeah,
that's what Joe Biden was supposed to stand for, moving away from that, right?
yeah,
I wanted to mention, you mentioned the stock market melt up. These
yeah,
stats from Torsten Slok at Apollo. I don't know if you saw a note earlier this week, but it's talking about the magnitude of the AI bubble. And I found it fascinating, and I'll read it to you guys. So the market cap of the Magnificent Seven is now 4 times the market cap of the entire Russell 2000. Okay. And then
yeah,
the market cap of the Magnificent Seven is the same size as the market cap of the stock markets in Canada, the
yeah,
UK, and Japan combined.
yeah, yeah,
Um, Pretty stunning numbers. And
yeah.
yeah, I don't know where it goes from here, but
Well, I think in the movie, uh, most of the Magnificent Seven, they were shot, weren't they? They end up on Boot Hill, and actually they're underperforming a little bit. But yeah, so uh, he's comparing this to like Nifty 50 on steroids with the
yeah,
Mag 7, right?
yeah,
We know what happened to the Nifty 50.
exactly.
So, yeah, that's a great word of caution from you, Pedro. And, you know, we've been talking for years, and, I'm going to take the opportunity to thank you for taking time out of your day every 3 months or so to come and talk to us and edify the faith community. Really
It's my
appreciate it.
pleasure, and I really enjoy it every time. Great
All
questions.
right. Well, yeah, well, great conversation again, Pedro, and everyone, you could follow him. It's at MNI, right?
Yeah,
.com for your
market
articles.
marketnews.com is the website. Check out my podcast, which is called FedSpeak. I recently had the likes of Jim Bullard and Esther George, former
Wow.
Fed presidents, on it.
Yeah.
Yeah, always some top-notch guests. So
Are
please
you a
check it out.
tough interviewer, Pedro? Or do you throw a lot of softballs?
These days I try to stick to macro. Let's put it that way. I'm a
Okay.
tough interviewer when it comes to macro and policy issues, but
Okay.
I don't veer too much outside of those topics in the
Uh,
podcast.
all right. All right. I figure you're too nice of a guy. Anyway, you have to,
It's
have
not that
a
I'm that it's
have
not
a
that I'm
net.
nice, Dale. It's that I've learned my lesson over the years. These are
Right.
if you want to stay employed, you got to have repeat engagements, and so
Yeah. You're
you,
right.
you
You're
can only
right.
be
I've learned.
so tough a couple times, and then then you
Yeah,
run out of
I mean, I've been hit with a ball peen hammer on the head a few times. I'm still trying to learn that it hurts. So
exactly.
anyway, I hope it's a great year for you and all your associates and people that follow you and your family on all levels, Pedro, not just reporting. Hope you get the scoop of the year.
Thank you
And
very much.
there's
I'm working on it.
and a
Let me
Pulitzer.
mention one more thing, which
Go
might
ahead.
be of interest to your listeners, which is that M and I recently hired. I'm very excited because we expanded our coverage to Latin America, and we hired a very smart reporter in Brasilia who's covering the Brazilian central bank and the Mexican central bank. So as
Wow.
the importance of these economies grows, we are paying more attention to them, and I'm very excited about it. In part because I'm from Brazil originally, so it's nice to
Yeah.
be paying attention to
I
my.
just read an article a friend of mine sent to me that the strong peso is hurting tourism there because everyone had this concept you could go to Mexico for an affordable vacation or to live there. That's changed
Yeah,
or changing. Yeah. Okay. Well, thanks again, Pedro. Have a great weekend, buddy. And
thank you all.
I'll be in touch and we'll talk again in the spring. Okay. See
Sounds
what's
great.
happening then. All
And
right.
here's
Pedro
to
da Costa,
prosperous
everyone.
2024.
and follow him on X at P da Costa. And he's a great source for keeping on top of central banks. Great publication he's with, and Pedro's stuff is top shelf. So that's a wrap for the whole week, everyone. I hope we added value to what you're trying to accomplish. We try and build up and edify people every day. Have a great weekend, and we'll be back. I believe, I'm not even sure if we're going to be here Monday or not. I'll ask Blake. Have a great weekend. If you're in the US, have a great holiday. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.